We're going to win. All right, so today we're going to talk about federal income tax. So here's your income tax, but we're going to do the federal part. So again, this is a withholding tax. It's kind of a lot like what we did in the chart yesterday, but now we're going to have specific things. So the tax year ends on December 31st, but you must pay by April 15th. And that's where this year, if you heard, they actually extended it, right? Yeah. So you didn't have to have your taxes done by April 15th this year because of everything that went on. So usually you go through and you can do this online now, but you could go to an accountant and have them do it. And you would fill it out. Basically, I take my stuff to an accountant, hand it to him, and he punches a bunch of things in, and he tells me what I get back. Okay? But it's going to show all of your earnings. It's going to show all of your earnings, and then it'll get broken down. And then, as Mr. Macklin and I were talking about here earlier, in case you didn't hear it, you're always going to be taken out. You're going to get things taken out. Do you get enough taken out? That's what happens at the end of the year. If you get more than what you should have taken out, you get a refund back from the government. Okay? Federal government, state government. For whatever reason, my state is always right around even. I might get a few dollars back. Okay? If you don't take out enough money, then you actually have to pay the government. This would be if you maybe inherited some stuff and you had more income than you actually thought you were going to have, then you might actually have to pay the government. Okay? So, we're going to talk today about adjusted gross income. Again, gross income is how am I bringing in money? So what are ways that you could bring in money besides your job? Where else would you get money?
Selling something.
What?
Selling something.
Okay. Maybe you had some land and you sold some of it. What else?
Selling crops.
Okay.
Well, I guess that's selling something.
And it's still selling some. What else?
Jobs.
Okay, maybe other jobs.
Like odd jobs, like doing someone else's chores, like mowing their lawn or something.
Okay. What else?
Winning money.
What?
Winning.
Okay, yeah, if you go to the casino or something, you win a prize. That's a good one. What else?
Tips.
Tips. Well, but that's could be your job. Okay, so that's an idea. What else? Borrowing money? Maybe. Yeah, maybe. How about if you go to the bank? How many people have a checking account or a savings account? You gonna make any money on that?
Yeah. Interest.
What do you call it? Interest, right? Interest is an income for you. Okay? You ever pay taxes on interest? At the end of the year you do. That's why you take that to your accountant. But interest would be. So, salary, wages, commission, those are all kind of things. Tips. Bonuses. You probably don't get a bonus at the parlor yet, do you? Okay, but Christmas maybe, maybe you get a birthday bonus, but a bonus. All right, prizes, somebody said. If you sell something, like Tiff said, your stock sales, what are dividends? Ever heard the word dividend?
Nope. Well,
In
yeah.
business? Dividends are always good for you. So you would have like stocks and stuff, and it would go up. That's a dividend. You would get money back from dividends. Okay? So, adjustments to income. What would I have to pay for? So this is kind of what we talked about. Any subtractions that I would take away from my grand total so I can get away with it. Remember when you said you're trying to, some people were trying to get you more money yesterday? That's what these adjustments are. So adjustments are if you have a business loss. So a lot of people probably use this COVID season. If you're a small business owner, okay? Payments to approve retirement plans. You do not have to pay taxes if you're paying into an IRA plan. So this would be some kind of a retirement plan. You're going to pay taxes way at the end. But that's okay because you'll have a lot of money then. All right? That's why retirement plans are good. Alimony. So if you're paying child support and you're divorced, you get a tax deduction out of that. And then any penalties? Penalties would be if you had a credit card and you forgot to pay it 1 year or 1 month, and you had a penalty, you can count that as a deduction. Or sorry, count that as an adjustment to income. So then we talk about deductions, and this is where we're going to start getting into money part of it.
Don't rich people they donate so they don't have to pay taxes?
Donations, you would get money back out of it too. Exactly right. You get money towards your total.
So with borrowing money, like Tyrell said, do you have to put that down as a source of income for taxes? Or it doesn't have to be like a large amount of money that you borrow for a certain amount of time.
Like your mortgage or whatever. Your mortgage is a deduction. So when you're borrowing for a mortgage, you can count that as a deduction, and that's kind of a little different part of it.
Okay.
But you're gonna take and use that money for a certain purpose. So they're gonna get you one way or the other. Okay? So deductions that I can include. So again, I'm going to deduct this from me. This is good. If I have an adjustment or a deduction, that's good for us because we're kind of hiding that money from the government in a sense. That's kind of what you were talking about. Now it's still there. Everybody knows about it, but we're going to kind of hide it. So where do you get deductions? Deductions are interest from your home mortgage. So if you have a mortgage, that's one of the reasons. The argument is if I should buy a house or if I should rent a house. You get some tax deductions from actually having a house. Even if you don't actually own it, you're just paying on your mortgage. Okay? Property taxes would be the same thing. If I paid property taxes because I own land or if I own my house or whatever, I get a deduction from that when I do my taxes. So again, that's another benefit of owning, considering state and local income taxes, and then other things that you can see here. And this is your charities one right here. So this is why you would give money to a charity, even if you give money to the church on a weekly or monthly basis. You can use that as a tax write-off. Okay, so it's a benefit. So basically, what's going to happen here? You're going to add up all these things. You're going to see what your grand total is. If your grand total is less than $5,450 as a single person, or you and your husband or wife have it less than $10,900, you can use these two numbers as your standard deduction. So, now again, you've got to have enough money made up. First off, so you guys right now probably don't qualify for this individual thing because you don't make enough money in the first place. You know what I'm saying? So, but if you do, and your deductions, you start counting them up, and they don't reach this number, then you always want to use this number. And again, these are two numbers that you need to start kind of thinking about. All right? If your deductions go over the standard, then you would start filling out an itemized deduction form, and you can use that total thing, but you'd have to fill out a separate form for that. So most of the time, you're probably not going to get to one of those two numbers, and you just use one of those as your deductions. From there, then, the other thing that's positive for you is an exemption. So this is the amount of income per person that is free from taxing. So how can you get exemptions? You can use yourself as an exemption. You can use your kids as an exemption. Okay? You can claim one for yourself or your spouse. and each dependent as long as you're not a dependent on someone else's. So, if mom and dad are divorced, you cannot be used for both mom and dad. It's only one or the other. Because otherwise it'd be like double dipping. Okay? So, you would start counting these up. So your standard deduction, I would get $5,450 myself because I'm single. And then I would start counting my exemptions. I get one for myself, I don't have a spouse, and I don't have any dependents. So each exemption is $3,500. So I get $3,500 plus the $5,450, and I would use that as my adjusted gross income because I'm going to subtract out my deductions and my exemptions. So I'm going to figure out what my taxable income is. I'm going to take away all of those things that we just talked about. And then that number we would put into another table to figure out what I owe in taxes. That makes sense? It's kind of interesting, I know. But turn to page 49. We'll look at a couple of these things as we go through this. So again, we're thinking about deductions and exemptions. All right? And this is probably things that we probably want to write down a little bit more today than what we have in the past. So we're on page 48, letter A. It says, find each person's taxable income. So Clara is single and has a gross income of $32,600. So that's how much money she makes before taxes. From there it says she pays $2,600 into an approved retirement plan. Clara has deductions of $6,900. She has one exemption for herself. So if you look over here on the right-hand side, they kind of go through this one for you. For Clara, they started out with $32,600 and they subtract out the $2,600 because it's an approved retirement plan. So again, anytime that you have retirement, you can take that away from your income. You don't get penalized for that. So I can put that into a separate account and I don't have to worry about that until I actually retire. Okay? Then it says she has deductions of $6,900. Now the standard deduction was only $5,450. So if I have anything that's more than that, I'm going to use the bigger number. Again, this is kind of what Justice said. We're trying to hide some of this stuff from the government in a sense. So we're going to take my $6,900 because these are my deductions. And it's more than the standard deduction. So if it's more than, we're taking the bigger number. So we subtract. And then finally, it says that she had one exemption, right? She doesn't have any kids. She's single herself. So she's going to take another $3,500 away. So if we subtract again, we get what? 12 minus 3 is 19,600. So this number right here is her taxable income. This is what the government would look at. So notice the difference here. She started out with this number right here. This is what the government actually thinks about. That's a big difference, right? We're talking about $12,000. She saved because she kind of hit it like Justice said yesterday with all these other things. So that's why you want to go through these deductions and exemptions and figure out how much you're kind of hiding. So then you would take this number right here and you would go to a table like on page 49. See on page 49 where there's a couple tables? Now, obviously, if you looked at our number, 19,600, it doesn't fit in any one of these, right? So they specifically just chopped it up to show you different portions of it. But they would have this chart from 0 to whatever. And then they would be able to figure out your taxable income. But that's where we would take this number to that kind of chart. And then you would go across, just like we did yesterday, and you would figure out how much you would owe in federal taxes because of this number that we just calculated. That make sense? So let's go over and look at capital A. Tyrone is single and has adjusted gross income of $65,000. So that's what we're starting at. Okay? Tyrone has deductions of only $2,900, so he decides to take the standard deduction. How much was the standard deduction for a single person?
$5,450.
$5,450. And again, this is my standard deduction. And again, why did I use that number? Because my deductions didn't get to that number. If it's over that number, I use my own deductions. If it doesn't get to that number, I always use this one. Okay? How many exemptions does it say?
He claims 1.
He claims 1. So how much were exemptions for single people?
3,500.
Or every exemption was $3,500, right? So we do the math. 0, 5, 5, 9, 5, 0, 5, 0, 6, 5. Is that right?
Yes.
So $56,050. So again, then, if they had a table that was big enough, we would take that to a table like on page 49, and we'd figure out how much taxes we would owe. But we're just going to subtract those things out. Okay? So this is, all right. That makes sense?
No.
I thought it was since they're married.
He was married?
Yeah.
No. He's single.
Wait, we're doing B, right?
No, this is still A.
Oh, okay.
We haven't got to B yet. Everybody good with A?
Why can you use the standard?
Why can I?
Why?
Because I always want to use as much as I possibly can.
I know, but like if he doesn't make that, why can you use that?
I guess they're trying to be nice to you, in a sense. It's just one of those things that it's the basis. So they're trying to help you out getting to that. So
Okay.
that's a good question. Okay? So let's try B then. In B, Alice and her spouse have adjusted gross income of $50,000. They file jointly. So again, this is where you got to make sure you read that closely because that's going to take you to the next section. See in the little charts down there, it says single, married, file jointly, married, file separately. Those are separate things. Their itemized deductions are $11,500 and they claim 3 exemptions. What is their taxable income? So, we'd have $50,000. Do they want to use the standard or do they want to use their own? Their own, why? Because it's more, right? And how much was it?
$1,500.
Perfect. And then it said, how many exemptions did they have? 3, so it's always $3,500, and we're going to multiply that by 3 to figure out how much my exemptions are, right? 0, 0, 15. So we get another $10,500. And if we did the math there, we get a grand total of, anybody punch that in? 50, 40, 30, 28,000? So notice here, this is a big one, right? We started out with 50,000, and we end up only have to pay taxes on 28,000. So that's a nice one, right? So then again, we would take that back to a table that's like on 49, and we would figure out what we would get for our taxes. Okay? Makes sense?
Yes.
Yes.
Perfect. All right, so then the next part is my income tax due, and this is now going to kind of figure out the exact same thing that we just did, but this is what we would try to figure out, and this is where Easton's question would come in. Do I get money back in a refund, or do I still owe somebody? So again, they would tell you how much these people right here would have paid in taxes during the year. Again, you have to pay taxes somehow, somewhere. This would be how many you're actually asking for at the beginning. Is it 0 or 1 or whatever? So they're going to take something out. Does that number exceed what you ended up figuring out, or is it less than? And then you'll decide if you get a refund or if you have to pay them. Does that make sense? So, same concept. Letter C. Bill Rustin is single and has taxable income of $13,576. So we're on page 50 now. So basically, what did they do when they gave you this number right here? What does $13,576 really mean? That's like these numbers over here. So they did this process for you in letter C already. Okay? So, when you're going to use the little chart, you're looking for taxable income. If they don't give you this, then you have to go through this process to get to this. Make sense?
Yeah.
But they did that. And how much, what was that number?
13,576.
Okay. So, what's the other number they give you?
1,827.
Okay, what does that mean?
What they get.
His employer deducted $1,827 for the year. So right now, this is what we ended up with after that. We know that it was, say it one more time.
1,827.
This is how much my business took from me during the year. Okay? This is, now we're going to figure out what the government thinks this number should be by using the table. Okay, so what was this guy? Single?
Yeah.
So turn back and find this number in one of those charts. Now again, it's going to be in between two numbers. Right, Donald? That's kind of where you got confused yesterday. So where does this fit into? And then go across, and we're going to use the first column because he was single, right? So 13,576. So, this was my taxable income. The government says we owe $1,645. We have already paid $1,827. So, do we get a refund back or do we have to still pay? Refund. So, this is what we owe. This is already what we've paid. So if what we paid is more than what we owe, we subtract and get that back. The government sends us a check. If this number is less than this, then we have to pay more. And we'd have to send the government a check. And that's where sometimes, like I said, the state, for me, would be that number.
So like we could just do our taxes ourselves and then like turn in an envelope or something?
In a sense, yeah. As long as you understood all the little nooks and crannies of it, and you could prove that you counted everything, yes. So yeah, like, I think Mrs. Harpinaugh does hers.
Yeah.
Because and there's little things on your, you can look it up like on the internet, and they'll walk you through all of it. But I do it just so I'm not wrong, I guess. Okay? So let's try the next one. Letter D. Vera is married and files a joint return. Vera and her spouse had a taxable income of $23,901 last year. The amount withheld from their wages was $2,500 during the year. Find their tax due and refund or amount owed. So, take $23,901 back to the table, but make sure you do it in the right column. So they were married and they filed how? Joint. Okay? So what's the number we would use for this one. 2,900 and what?
806.
806. And how much did that company already take out for us? Say it again?
2,509.
509. So again, this is what we owe, this is what we paid. So, do we get something back?
Yes.
No.
No. This is what we owe. We still owe just about $300. So I'm going to subtract those two, and whatever that amount is.
306.
30 what?
3. Dang it, 3.
So $303 we owe the government. Okay?
Stupid Google.
Darn government. Getting us. Sleep them. Oh. Page 1044. Unfortunately, we might not get done today.
Shucks.
Alright.
Nuts.
Any questions with this? This is kind of the important part. And again, this is where, you know, if your parents are kind of open to this, they probably don't even know about, like, what their deductions are until they take them. I would have no idea what my deductions are. I don't think I really have deductions. So I would always take the standard deduction plus the exemption for myself. Okay?
Could be losing money.
I could be, but I trust Mr. Scheidler's dad. He does my taxes.
TurboTax, baby, on Marcus, Dad.
Yeah.
Good old baby.
Yeah, you could take it to Barbara's. All right, so the last thing, we're going to start this and then we'll have to finish tomorrow, I'm sure. So that's what we're talking about, income tax refunds. Now this last part is where we're going to get into with you guys as how you are right now, okay? So you're going to talk about tax refunds. Parents, again, if the parents claim their child, the child cannot claim him or herself. So remember we just went through here? If your mom and dad claim you as an exemption, you cannot claim yourself. Because basically, then you're getting claimed twice.
So is that like kind of up to the kid, or?
No, probably not.
Not until you're 18.
Yeah.
Because right now, I'm
It's like
saying,
to get thrown it down.
Wait, so like since I'm 18, I shouldn't be claimed?
you can't be
No, they can still claim you, but you would have probably an easier choice if you went to them and said, I would rather claim myself.
Would I get more money then, probably?
Probably not still because you're not making enough in the first place. But you might get all the taxes back that they've taken out if you claim yourself.
I think I do blame myself, I want to say I do.
You could.
Isn't it once you turn 18 they can't claim you anymore?
No, you can still, I think you can get still claimed as long as they can prove that you're,
But they won't get any money from you. Because I know that once you're 18 and under, don't they get like, I thought they got like 2,000 for every child they claimed or something like that.
You can get it for like a 6-year-old too. Why would 60-year-old? Why would you not get it for an 18-year-old?
Well,
As long as you're taking care of someone, you can
Right.
claim them, right?
so like you can, if you moved out when you turned 18, then they couldn't claim you. Because you're not dependent on them. You know what I'm saying?
Yeah.
So like if you lived at your house, even though you go to college, you're dependent on your parents. Okay? Maybe not all the time or the whole amount. They might make you make payments on, your schooling or whatever. But you're still dependent on them. Because you're going to come home and live there during Christmas break or the summertime maybe or whatever. So it's kind of like if you think about it as the golf course. You're still a part of the family membership, even when you're in college. But after you would actually move out, then you have to get your own family or own membership. It's kind of the same thing with this. Okay?
What if?
Go ahead.
Do you have to be claimed at all times?
No. Again, you could go through and say, I would rather have myself and claim myself because I'm making, you know, good enough money doing something.
Right, okay.
But most of the time, you're not gonna make enough money on a part-time job that you're gonna be able to. In a sense, you're saying that you could support yourself doing everything. You know what I mean?
Yeah.
So you're paying rent, you're paying gas, you're paying all that stuff by yourself because you got a job that can pay for that.
Okay.
So if you have that kind of a job as a part-time job, yeah, you could do that. Okay? So we'll just start on this tomorrow. All right?